Welcome back, Alpha Hunters. Okay, the market just closed for the week of April the 8th, and we had some pretty good action that kind of went on this week. So I'm going to get into two news items here in a little bit, but let's just take a look real quick at just what's going on the SPY and a little bit of what's going on the Qs, okay? So on the SPY, we have a little bit deeper of a pullback, which maybe not a problem, probably isn't a problem. It's just pulling back a little bit more because this was a very bullish trend that we had from pretty much the mid-March point up to basically the end of March. Okay, so we're having a little bit of a deeper pullback, which not a huge deal, honestly. Last week I did say that the 4 was at the bottom of, I believe, of Friday's candle of last week. Now, either we just hit the 4 or the 4 was actually put in on March 23rd. I'm not really sure. I'm actually more inclined to put that on March 23rd for this smaller wave where you got a 1 up to hit this point on March 9th, and then the pullback down to March 14th for the 2, and then the 3 wave. Let me get the 3 wave. Readjust that. The 3 wave would be at the top then on March 22nd, and then the 4 pullback on March 23rd, which then would make this 5 at the top of March 29th. Okay, so the reason why I wanted to redraw that is just kind of give you a little bit more what I'm kind of thinking of my game plan, because the way that works out is it lines up a little bit better with what I think is about to happen on this wave now. So I'll move that 3 on this longer term one where we had the bottom back in February 24th. Remember the morning of the Russian invasion? And then we put in a 1 on the top of March 3rd. Yeah, March 3rd. And then the bottom of that second wave was March 8th. And then the top of that 3 wave was then March 29th. This 4 wave, I believe, is now right there on that April 6th day, which was Wednesday this past week, which means we'll probably go up into probably this area. I don't know, somewhere up in there, and it might even be a little longer than that. Say go out to maybe the beginning part of May. So I do think we'll do something like that. We might shop around in this area. We might go down and hit a little bit lower low on this recent pullback. I don't think it is one where we get back down into the mid 430s or lower. I really doubt we even break this 1. Actually, we shouldn't break that 1. We really shouldn't go much lower than what we currently already have. So we really don't want to go lower than this 440. What was the top of that day? 441.11 of the SPY. So if you're watching that on the ES, pretty much the same thing. And I'm going to tell you a big reason why I'm bullish right now. And it comes down to one of the big news topics of the week. So on Wednesday, the Fed announced that they are going to be shrinking their balance sheet by about $95 billion a month. A maximum, okay, at a maximum. Right down here in the article actually says that at a maximum pace of $95 billion a month. Previously, when I heard that they were going to start doing that, that was one of the biggest bearish things that I really did not like about the market. And that was back in November, December when they first brought that up. That was the main reason why I was kind of bearish. While everybody else was talking rates, I didn't really care so much about rates. I was caring more about how much is the number one market participant going to be liquidating their assets, right? So if you have the number one market participant, which is the Federal Reserve, taking liquidity out of the market, how is that good for the market? Okay, so they have now told us the pace in which they're going to do it. And not only did they tell us the pace, but if you notice, on Wednesday when they said that, we gapped down that morning, okay? And when the news came out, the market didn't really do a whole lot. This is what the market did, okay? So this is a 15-minute intraday candle. and it bounced, it rolled over, it came back down, made a new lower in the day, it bounced again, and it just kind of hung out. That is not an indication that the market is freaking out about the Federal Reserve potentially liquidating $95 billion a month, okay, going forward. And the fact that we did not sell off or crash hard over then Thursday and Friday just leads me to believe we're going to be bullish, okay? When you get news and the market doesn't react to it, especially negative news like that, don't be bearish, okay? That was a pretty extremely bearish news to me, but the fact that the market is not bearish and did not react bearishly just leads me to believe we will eventually be going higher, okay? When it was first announced back in November, December, then yeah, that was the time to be bearish because we had never heard that before, that the Federal Reserve is going to be shrinking its balance sheet, and then there you go. That's what you kind of caused. You get the pullback that we got in January, February. Now is not the time to be bearish, okay? So just wanted to kind of lay that out there. That is why I'm not really looking to be bearish between this strong move that we had for 2-3 weeks and the non-reaction we got from Wednesday's Fed announcement. Not looking to really be bearish, okay? So then what is kind of working, what is not kind of working? Well, as we see on the SPY, it was kind of choppy all week. We did start higher. We did buy up on Monday, but we did on such low volume. It was the lowest volume day of the year. Actually, going back to all the way to December 28th and 29th, that was the lowest volume day of the year on the SPY, okay? So I kind of figured that that was just going to be a fake out, and we just wound up going back lower, and pretty much the next day we did. So it is what it is, but I bring that up with a very valid point. One thing that you learn when you do options is when you get into choppy markets, especially the ones that we've had recently, go farther out in time with your options. Give yourself plenty of time to see what the market is going to do. That way, if you're wrong and it bounces back, then you can reposition, readjust, close positions, whatever. But make sure you buy yourself plenty of time. That way, theta does not kill you and you allow yourself time to see what the position is going to do. This is key right now as the market is not really in a trend. It might be starting one. We don't know. We're going to have to wait and see, but we need to just be cautious on trying to take quick and short positions as we're just in no man's land, okay? So when you're in no man's land, you just kind of want to go out, buy some time. That's why if you've been following some of the trades I've been putting out there, you know, they go out to January 23, all the way out to January of 24. It just kind of depends on what I'm looking at, but I'm buying plenty of time to let myself see how things are going to shake out. If we wind up breaking down and then bounce, maybe I'll reposition, maybe we'll look to go lower. But as for now, I'm not really looking to do that. I was buying more stuff this week as we did sell down, especially Wednesday before the Fed announced. I did buy some more because volatility was low. I was looking to get in before the Fed announced something because I knew volatility was just lower then than what it would have been after they announced. So that was one reason why I did buy before the Fed announcement. But I'm looking for probably a bounce to start next week, and if it doesn't happen next week, we do roll down a little bit lower. I don't think we go much lower. I would look for the bounce probably the second half of the week if we don't get it right away going into Monday or to the week after. Okay, so that's kind of what I'm looking at. And then on the Qs, here's something very telling, and we're going to look at some of the semiconductors here again in just a second. But the Qs sold down pretty good this week. They continue to have pretty good weakness even today. They weren't really keeping up with the SPY on like upward moves during the week. So this is something that we're going to have to really watch. Maybe the Qs are going to continue to lag as we do go into the second half of the year. I thought they would be a little bit stronger, but they were definitely pretty weak this week in the marketplace. So we'll just kind of have to see as how they do, and maybe we just kind of cut some positions on the technology side. And here's one of the things that I was really kind of interested in watching was Nvidia. Man, look at that, weak all week. It was just not strong at all. And so Nvidia not looking good. Micron still not looking good. Maybe we got some buying that came in towards the end of the day today on Micron. AMD was also weak all week. Man, that is really messing me. Weak all week. Okay, so it's just one of those things that semiconductors definitely are not performing well. So we are seeing that rotation out of stocks that have worked a lot really over the past 12 to 13 years, ever since the '09 bottom. And we are starting to see some slowdown in a lot of those stocks. So what are they rotating into? Well, at the end of the video, you will see the video I put out on Monday about Coke. So Coke actually performed really well. I did the video on Monday, and as I was doing it, I was kind of like, this is like the perfect time to buy, but I was doing the video while it was happening, so I wasn't able to get that video out to you guys until Monday after hours. But Coke looks fantastic, so you need to be going and looking at these kinds of names, and I actually do rattle off several names in that video on what potentially will be working, what has been working here recently. Coke is one of those names, as it is breaking out to all-time highs. You know, you can look at Pepsi. Pepsi looks kind of the same, although it's not reaching its all-time high right now. Kroger is another one. I looked at Kroger today. Look at that. It is pretty much right at its all-time high, and it's looking pretty good. Now, some of these names have had pretty strong runs here over the past few weeks, and this is why I do think we'll probably start to see some bullishness in the market, is people are going to come in and start to buy up some of these discounted tech stock names, and tech will probably lead us to the upside, as some of these defensive names have just been performing pretty well over the past couple of weeks. I do expect them to kind of have a little bit of pullback. So if you haven't gotten in on some of these names, I would look for pullbacks to get in, and they might not be super long lasting pullbacks, but if you can get like a couple days of selling on some of those names, I would look to start getting in bullish and start to look longer term, you know, go out several months on some options positions and things like that. But that is some of the things that I've been looking at. The last thing I actually wanted to talk about, newsworthy this week, was TWTR. And if you heard about this, Monday morning, it came out, well, it came out over the weekend, and Monday morning was the reaction to it. But Monday morning, Twitter had a very, very solid gap up and was up 27% on the day. And it all was reaction to Tesla CEO Elon Musk acquired a 9.2% stake in Twitter. So this is a pretty massive deal, obviously, for any kind of company to have such a large investment put into it. So we'll just have to see if he's looking to be, you know, active and trying to, you know, help change Twitter for the good. I don't know what his mindset is, but you cannot ignore the fact that it bottomed before that and started an upward trend before that news. So, and then you just got this massive gap up. I did buy towards the bottom of yesterday. Now it did break down today. Sure, fine. I just wasn't wanting to buy it during this run up here, and we've had pretty good pullback. So I did want to start tipping my toes into it, and I did go out far out in time. I think I went to like June of next year on some call options. Okay, so those were some of the things that I was looking at. I do want to be bullish on this company, as kind of hard to ignore really the chart, and then also someone that has been hugely successful, and pretty much everything he has touched has now taken such a large stake in another publicly traded company. Okay, Elon Musk has been hugely successful with a lot of things he's done in his life. This cannot be ignored. Okay, maybe he's not as successful with Twitter. Okay, sure, fine, but it's just something that definitely cannot be ignored. So let's take one last quick look at the Qs. And another thing about the Qs is we did have from the Russia invasion of Ukraine bounce, it is now sitting right on top of that support level. So it is a pretty good spot in the marketplace to be looking to probably go long, especially on the Qs. The SPY doesn't look nearly as bad. That's just kind of my thoughts on it. And if you want to be very picky on where you are investing your money, I kind of gave you some ideas earlier. So definitely look out for some of those as they continue to look really good. They're pretty cheap on a valuation standpoint, and they make cash. And another thing that I'm kind of curious about on the Qs here, and this could probably apply to the SPY as well, is I'm very curious if we didn't just set in a possible bottom to top right here, if this is not like a one phase. on an Elliott wave. Okay, if that's a 1 phase and maybe we're putting in a 2, and then I would look for a 3 to go actually above the all-time high, 4 to probably come back below the all-time high that we would have, and then the 5 would be up above. I won't worry about drawing out the 3, 4, 5, but I'm kind of curious if we did put in a 1 right here. So obviously only time will tell. We'll have to wait and see, but it's one of those things that was a pretty strong move that potentially maybe we did. Check out that Coke video and have a great weekend, everybody. Alrighty, take care, Alpha Hunters.